Today on Growing Idaho, if you're looking to buy a home, the current mortgage rates don't have to be your mortgage rates. You can actually buy those down. Last week on Growing Idaho, we gave you some options on how you can get into a home more easily than you might have realized. Buying down the rate was one of those options. But how does it work? Well, first, let's talk about the current rates. You can see from the start of the year until late last week, mortgage rates are down a little. Freddie Mac says the average rate on a standard 30-year loan is at 6.65%. That's down more than 0.25% this year. That's the blue line. The green line is the 15-year loan, which is at 5.8%. That's down even more. But if you're thinking, look, I want to buy a home and that rate is still too high, I wanted it maybe 3 or 4% like it used to be. Well, experts say we're probably never getting back to those, although we could. But you can lower your rate yourself right now by about a percentage point. It does cost more money up front, though, so that could be the deal breaker right there for a lot of you, especially in this housing crisis. But there are also ways to find that buy down money. Chuck Crockett with the Idaho Housing and Finance explains how it works.
So you would typically have your normal interest rate that you might see on a website. You might see it, people talk about it on the news, obviously, and maybe that's 6.75%. A lot of times with these builder incentives, you can take the money that they're offering you and you can buy that rate down. So you can pay an extra point. With a point is typically 1% of the loan amount, and you could buy that rate down to perhaps even in the fives, maybe high fives, 5.5, depending on how many points you can pay down. All lenders have a buy down schedule that you can take advantage of. So if you have the cash flow, or if you're taking advantage of some of these incentives, then you can definitely buy that rate down. And like I said, that's got an impact over the life of that loan, not just at the time of purchase.
Again, it's more money up front, but it saves you so much in the long run. IHFA is not a lender, but they do administer affordable housing resources and work with a bunch of lenders. So they and the lender could tell you exactly how much it would cost you to buy down that rate and by how much. IHFA also can connect you with a rate that's about half a point lower, even without you having to buy it down. Just like I said last week, though, this is not going to work for everyone or even a lot of people. But hopefully it works for some of you, and maybe some of you can finally get into a house. Coming up next.